Hello guys, glad to have you on board again. Today we're gonna go straight to this so we can clear this out. Yes, this is my birthday, so thank you guys for all the messages you've been sending. Don't feel like you have to. You have to be aware that I'm receiving a lot of messages, so thank you for this. But once again, I don't really care about fucking birthday. To me, it's just one day about the 365 days a year. Nothing has changed. I'm working today just like I'm working each and every fucking day. So it's not a special day. It's just that, yes, I might be hanging out a little bit more than the usual kind of day, which means I'm going to clear out those daily reviews and probably gonna go enjoy some rest today. So this is just the only difference that's going to be from a usual day. I might be taking the afternoon off the social networks and things like that, but I'll still have a look at the market throughout the alerts I've been setting in this market. I will still trade if some opportunities will show up, and it's just a day like other days and no more than that. Thank you for those who sent messages, but if you don't send them, really that doesn't change that much. So, moving on. Cryptocurrencies first, not a big deal. Yesterday, kind of a retracement day. Once again, the market is just slightly moving more than 2%, and everybody is just driving crazy. So, get used to this. This is how it's going to be, and it's probably going to last for a long time. So let's just get back to the essential information, the one you really need to be aware of. As long as you don't break both the highs or the low, there's nothing we care about. So right now you should just have a few sets of alerts, 5,900. As long as we don't break those, nothing that you should give a shit about. And as long as we don't break 7,400, nothing you should fucking care about. The recent tried attempt to break this up has only been done by Bitfinex. So it's the only market exchange that managed to break through that high. So other exchanges didn't manage to do it. So regarding this, there is still this thing to be done. So I still consider the current resistance to be near those prices. So as long as we don't break the red area, there is nothing you can consider bullish. So we're right into the DOM zone area. We might have some support in terms of timing in here. So we're looking definitely for buying entries. We're in a bullish cycle. We've got a potentially bullish momentum, but we can still find a bullish confirmation. We mean we don't have that damn blue triangle. Whenever we'll have the combination of those two, we're still in a bullish cycle. As long as we remain above 6,400, we're good, which means any bullish confirmation from momentum is tradable if it's followed by a bullish price reactivation, which so far we aren't doing. So until we manage to find a bullish candle with a blue triangle, there's nothing you should trade. Moreover, we're just getting started into the interesting price area. So we just dipped a toe in here. We're probably going to dip a little bit lower than that. And we'll need to search for the next bullish cycle. The next bullish confirmation on momentum. So you can see the oscillator here is making a bullish oscillation. So you can basically wait for this one to just play its game, kind of ranging neutral in here, waiting for the next bearish impulse. It's going to be the next bearish cross of that oscillator. And let's hope for a signal in the next area. And if you don't have such thing, you just don't press the button and then you wait for the market to break a resistance. If you don't have enough signals to limit the risks using the indicators, you just don't trigger the fucking speculative trades. And I'm talking here for speculators, those who want to make speculative entries. Those who made the buy and holds like me, still not a fucking shit you should give about the current prices. Either we break the 7,005K or the 5,009K and 5,900. And as long as we don't break any of those two boundaries, the long-term buy and holders have nothing to care about the current prices. So you just let it go. Let the stupid traders take care of whatever they want to trade. If you're buying holding, just fucking stick to the plan. But I agree with those who wants to make speculative entries, because I think volatility is back in the game. So you can still try to take advantage of this. It will remain speculative, but you really need to follow the strategy rules in here, because the risk is really topping up as the volatility is playing its game in a market that has very low free cash flow. So it can be very volatile. There is a pending news flow, which means you're kind of depending on this. If there is a bearish catalyst showing up, the market can just collapse even though you've been buying, which means, yes, there is heavy risk that just the market will take you down because of an unexpected catalyst. So facing this, I personally choose not to trade speculatively in that market. I do have some in the Ethereum for other reasons. If you want to do in Bitcoins, I'm okay with this, but this is how you want to do it. Wait for further dipper, wait for a next dip, hope it will trigger another bullish pattern on momentum, and hope that this time you'll have a bullish price confirmation. And if you do have those three things, then I think you're free to go. Obviously, if you do take that speculative trade, you're going to protect yourself down that previous bottom. If you find a double signal, the price shouldn't obviously go there. Okay, so there is obviously a stop loss, a speculative stop loss below that dip. You're just trying to build a higher low. Okay, if the market confirms a higher low, you're going to play the next bullish wave momentum. But obviously, if the market reverses and chases the stop loss, you have to give it away. Okay, and if it happens, that's the game. You've been speculating with the highest level of risk that even I doesn't want to handle. I'm the worst in terms of risk-taking, okay? I'm taking the heaviest amount of risk that, among the professional traders you will find out there. So being more aggressive than I am myself, really, I don't suggest you to take those trades. But if you absolutely want to be in it, I'm okay with that, but you just need to be aware of the underlying risks. So that's basically all I had to say about the cryptocurrencies, because it goes the exact same for all other cryptos. Basically, they're not moving. They're not interesting at all to me. I'm talking about them because I know you want me to talk about them, but I cannot stress enough those things that you have to get used of those markets getting boring and just from time to time, because a market catalyst shows up, we have some volatility. This is what you'll have. Basically, a market that moves because some catalyst is impacting the prices and then just doing nothing for multiple days before waiting for the other outcome to show up. It's just that in the long run, I'm talking about weeks in here, we should have better odds, slightly better odds. As the time moves on, we should have better odds for deeper bullish volatility versus the bearish one, which should slightly bite by bite drive the market to recover some sense of bullishness in the long run. But that's all. I'm ready to trade. This is why I made the damn buy and hold and no speculative trades on Bitcoins. That being said, we're going to switch to regular regular standard markets. As birthday or no birthday, we'll still remain traders anyway, and the market never stops. So we had Chinese numbers this evening or during the night. Bad numbers, obviously. It's really bad. If you have a look at this in terms of trends, this is what it looks like in terms of Chinese GDP. So this is the growth period, back to 10%. Growth period terminated in here for them. Now they're switching back to, obviously, whenever the problem with China is that it's hard to call a recession. Normally, a recession is when you got when you're no longer creating profits, you're decreasing in terms of profit. So the thing is that there is so much growth in China that we can nearly say that below 6%, the economy is under recession. So the thing is that we're heading to a recession. The pace is, instead of slowing down, is kind of accelerating out there, which is not the best case scenario. You can clearly see that since the 2017 rise, we had multiple quarters rising the expectations. We're now decreasing and the speed is increasing, which is problematic. Because obviously everything we create in today's world, in today's economy, is basically built out of fucking Chinese stuff. So either it's been built in China entirely and it's 100% Chinese, made in China basically, or probably 80% of the pieces into the things you're going to buy, even if it's stamped by made in USA or made in Germany or made in whoever the fuck you want, generally 80% of the products in there are built from fucking China. So everything we create money out of is built in China. And it gives us two options. Either China is going to enter recession, and obviously there's going to be side effects in worldwide growth because everything is fucking built out there. Second option, China is going to survive out there and it's going to maintain 6%, but it's going to be done by artificial things, which means we're going to have distortions, and those distortions will obviously be tradable. So the question is, how can we manage to handle those distortions or this drop into the Chinese GDP, which both cases will create negative side effects for the worldwide economies, and especially those who have not been pricing the risks since then, and I stand on this. Wall Street's just fucking playing a dangerous game out there, thinking that everything will be right. It's not going to be right, obviously not, but it's just the longer you hold, the worse the drop will be, and I stand on this. I've been standing on this for months, and I still haven't changed a bit. I still think Wall Street is about the worst to come. It's just they're trying to hold it as long as they can, but so far it's just standing on Apple, and you know about that shit. The moment Apple fails, the entire equity market on the US will fail, and basically the ETF bubble will just burst and trigger the US to probably signal the bearish signal. The first bearish signal, at least terminating the bullish trends. So we'll just be out of bullish trending markets, not yet switching to actual bear markets, but we'll give the signals that yes, the trends are fucking finally over. We're going to make a lower low in terms of midterm trading. Okay, so we're not talking about necessarily about long term, but before reversing long term, what we're going to do basically is go search for that dip and slightly slip below it. This will just basically send the signal that bullish trends are fucking over. And I'm saying this for long enough that this is what's about to come. We're going to have to search for that support trend line and we're going to break it up. That's simply as that. These trend lines, they're not going to last one more time. Everybody think they will. I just think we're just touching them before fucking them up. And that's normal because at that stage of trends, we already made a wave 4. So this is wave 1. And wave 1 always fuck up a support. This is how it goes. This is the topic. This is the goal of wave 1s. So I don't see how we can manage to handle things in here. We can just range a few days, no problems, a few weeks, but we're obviously going to break this down. So if you're thinking that there's not going to be a replicate of the first shock we had a few days ago, I still pretty much stand against you and thinking that, yes, we're going to have a replication and it's going to be breaking down support. So we're going to head toward those areas and probably dip a little bit lower than that, just to signal the end of trends. End of trends will just means that we will, in the NASDAQ, it will look like a crash, obviously, so we're probably going to get to those prices without problems. But afterwards, there will be the dead cat bounce pullback. There will be the ranges kind of trading into the SPX that will last probably a few months before we actually enter into a bear market territory. But it is not going to last. It's not going to be the case instantly. I think we can make a 30% drop out of the NASDAQ because this one has been freaking overbought. But this is how it is. I mean, if we're about to dip 25%, I don't think the NASDAQ can nearly drop 30%. It's really too big. But I think, yeah, dipping 20% on the NASDAQ doesn't make that a bear market. Okay, we generally say, okay, bear market is when we switch, making closes below 20% drop from the market top. Yes, we are entering bear market territory, and we actually switch to bear market when we dip below 30%. So, yes, it may happen, but pretty far from now. This is not going to happen until probably Q3 2019. We probably can expect a few quarters of just fucking ranging. The market switching, as I said, from growth stock to value stock. And then when that switching will be done, everybody will fucking fall. But first of all, range is definitely the plan. No end of the world kind of trading. Even from what I said yesterday, that we might be comparing the price structure to 1987. Yes, obviously the comparison can be easily made, but you cannot just forecast the price to do this, which means either way, I'll take my profits in here with my bearish trades on the Nasdaq. And if the market end up keep on falling apart, straightforward to those long-term buy and hold areas, all I do is basically let the knife fall down, eventually take a few trades in between to take some cash, but you really need to understand that. I think this is really, really the key important part in here. The goal for trader is not to take every movement in the market. I'm not here to take every swing and take 100% out of every move. I don't care about that. All I care is to build a scenario and see the market filling the target instead of chasing the stop loss. This is really all I care about. So as my targets are in here, if the price goes there, I'm taking the profit. Why? Because that's the fucking plan, and I'm not going to go further than that. And if the market end up collapsing and surrendering those additional 30% in a straight line, then so be it. And what's the problem? I didn't take that gain. Yes, and what's the problem again? There's no problem. I would have taken a very nice gain. I would have filled the scenario from point A to point B. I would have taken a nice gain, and that's it. And if the market keeps on collapsing, I just move to the next step, because my job is not to trade what's happening right now. It's to trade what's about to happen next. So if I fail this, and if the market collapses, it wouldn't be part of the plan. I'm trading, so I'm not going to take those gains, but I'll obviously move to the next step, which is going to be making the fucking long-term buy entries below 4,000. Whenever we'll go there, I think the tech sector is definitely something you want to rebuy after the Black Friday kind of trading. If we go there, just like in 1987, you definitely want to buy those prices. So what I'll do, if it falls, is just searching for buy entries in that area, and that's it. Okay? After selling the top, even if I don't take the entire movement, I'll basically go into switching to the next step, which will be making the long-term buy and hold entries. But we're pretty far from it, and I still suggest the market has no reason to just entirely collapse. So I see reason for that market to just show some weaknesses in the short-term to mid-term range, start to break some support range, and in the end, finally entering into bear market recession kind of trade territory. So we're still searching for this to play out. Obviously, the thing is that Shanghai Composite's been reversing today, making a pretty nasty bullish engulfing pattern after gapping down, which means we definitely found some support. That was part of yesterday's questioning. So yes, we obviously found some bullish activity in here, which is good sign for Wall Street. Obviously, they wanted this to happen. Does it really need to be traded? I'm not so sure about that. But we clearly have a candlestick reversal pattern in here, and it's not highlighted by momentum. It's still in a breakout attempting pattern, but as I said, I think it's a range breakout. So we just confirmed that we might have found the bottom of a range in the expected price area. The thing is that Wall Street will have to make a choice in here. Either they're following it, they just like they've been doing before, everything that is supporting equities is good, so we're paying equities. Or now that Chinese is finding the bottom, then maybe that's the time for Wall Street to step on and start releasing the gains as well. So it might be just the worst timing ever. I mean, whenever China manages to find a bottom, this is the moment Wall Street steps in and shows some weaknesses. Could be the worst possible scenario. Wall Street been holding all the losses of China for a long time now, and now that they might eventually find a bottom. This is the timing that Wall Street will find to trigger the stop losses and trigger the collapses. Could be an interesting timing, but to be honest, right now the market was just about fucking up all the timings in Wall Street. So I wouldn't necessarily be surprised to see Wall Street falling apart today or tomorrow, even after the Chinese has managed to find a support. So I rather liked trading that market in a broader perspective. Just don't give a shit about the short-term movements, because it really is distortions, trying to survive, trying to make people believe that this is a buy the dip situation. Yes, it can be, but I really hardly think it is. And as long as I haven't been proven wrong, I will stick to that plan, which is, I think we have to expect more bearishness, even though Chinese might be showing some strength right now, or at least some signs of not further weaknesses. I think just we shouldn't try to understand and link those things. They're pretty much unlinked. If we made that comparison the other day, the fact that if you're just doubling in here and adding the Nasdaq upon the Shanghai Composite, it's NDX, yes. So if you just add NDX on top of this, you can clearly see we're totally out of any kind of correlation. So I don't think we should trade those markets with any type of correlation here. It's just too many distortions, way too many distortions for almost a year now. We're obviously going to have to correct this, and I think this is going to be done by two sides. Bearish movements on the Nasdaq and bullish consolidation in Shanghai Composite. Basically returning to both means the moment the distortion started, which is right here. Distortion started here, so I can pretty well see in the near future showing Chinese recovering when I see US just fucking falling apart. And I can hardly see any difference in how this can be any different. Okay, so obviously we're going to have bullish and bearish cycles in which everybody's going to move higher. As you can see, we're still respecting timings in here. When the market goes up, everybody goes up. Despite here the correlation is just freaking unbelievable. In here you clearly have Chinese going down while Wall Street's going up, which should never have happened. Never. I mean, in here everybody's going down, everybody's going up, so we clearly have a positive correlation. But really, on that phase, is really the most stupid way you could have traded this thing. I've never seen this. A correlation going negative after something that has always been positive. Okay? You can see the correlation restored afterward. Now everybody's going up. It's just they're doing it with different amplitudes. So I strongly think that what we're having in here is, yes, it can be a bearish cycle. But as you can see in the past, we've had that negative thing. So we could have it as well. Bullish thing in Shanghai, negative thing in the Nasdaq. It's possible. It's fucking possible. So we need to face that risk that we could very well have a bearish sign in Wall Street today, even though Shanghai has been given a positive sign. So correlation can be really tricky at the current time. And I think what has been benefiting the US can just now make them suffer more than the Chinese would. And I was expecting that reverse correlation to show up at some point. I think what might be the timing. So all I'm saying in here is basically, it's not because Shanghai's been managing to find a low to build a short-term dip and showing some signs of support, that obviously Wall Street will do as well. I don't take that as granted, as this correlation is freaking dangerously outplaying recently. So now other scenarios, the gold still doing pretty well. Depends on what Wall Street will do today. Okay, we're just trying to figure out if we're going to break yesterday's high or not. So far we haven't. Yesterday's high is in here. If we do manage to break this up, this could be an interesting eventual timing to put back the money I've been putting out of that market. Basically, I took my profits in here, just going to put that money back in the market at the exact same price. I was expecting a consolidation to occur. I still don't see reasons to stop this. I still think we can have some deeper or some longer consolidation in here. So as long as we haven't made 2-hour candle close above that level, I'm not putting the money back in that market. And I'm just waiting for informations to show up. Euro dollar is a scenario I'm pretty much concerned about. So I still have my speculative entries out there. I'm maximum leverage, which means I'm 3 on 5, but I'm not leveraged yet, but I'm maximum speculative leverage. So I would like, there is a management to make if we go there and break that low. So for now, we've been slipping below it. So the market tried, I don't know if the market managed already to do it, actually. Not yet, but I expect the market to try doing it. So we're got a slightly lower level trying to get there. I think the market will try to trigger some stop losses. If it finds the support to the downside and keeps on breaking down, then problems, which means I'm going to have to invalidate as well. The thing is that I think a stop loss in here is decent enough. It helps you managing the risks. I would say yes, below 1.1380, definitely a stop loss has to be triggered. So I'll say in here is invalidation of my scenario. Okay, if we go there, I think basically I'll have to step away. To step out and just let go. Okay, I'm going to take that dip in here. Back then, this is where we managed to find the low. So I'd say in here, obviously, maximum price for a stop loss. Shouldn't go there. For those who can afford it, there is actually the price you should put your stop loss down to. But anyway, I would like just that market not to be fucking taking stop losses and just finding some support in here, creating that stupid double bottom, and then breaking it up will trigger the next breakout entry, the one I really would like to take. So anytime we retrace back to previous resistance, it's going to be signs of validation, and I'll be ready to trigger the breakout trade. Anytime we'll break, you can see that trend channel in here is now showing signs of breaking it down, which means consolidation into wave A, B, C, or not necessarily A, B, C, but that's the time we're going to break that bearish consolidation level. So you can assimilate this as a trend line. Basically, whenever we'll break that trend line is whenever we'll have the bullish confirmation of that reactivation on the market. I still remain bullish on euro dollar, even though yesterday has been bearish. Yes, happens. But that's not how I see great danger for now. All I see is momentum divergences up to support areas. Market can try to chase the stop loss below that dip, but that's all I say. That's all I see in here, and I see no really big concerns in the meantime. So I'm ready to take that potential loss. It's not a big deal. I mean, yes, it's 1% down move on the euro dollar. Can happen. It's going to be a 1% loss, and how big of a deal that is, I don't think it is. So I'm basically waiting right now. I'm slightly more leveraged in here, so I might just lose 1.50, 1.5% if we were to trigger the stop loss in here. But I think so far, I don't have a stop loss in here. My stop loss is in here, and I'm ready to lose 2.5%, which is the maximum loss for a speculative trade. For now, the actual stop loss is in here, but I'll obviously have to handle the risk management if we had to go there. All right. GBP USD as well, same thing goes there. I don't think the market is bearish. I think the market's just retracing as expected. It's just we've gone a slightly lower prices than I would have expected. We're triggering another double bullish in here, still in the bullish cycle, still above the targets. I still think the market is bullish. So yes, I remain bullish in here. Just wait for the price to confirm this. So there is a breakout trade to play in here, obviously. But for now, I'm just waiting for the market to build the higher low from the previous standpoint. So yes, invalidation is if we were to go to reach out the target, which I don't think will be a good sign. But for now, we're still remaining positive. So yes, everybody is freaking out because the market is not going according to the plan. But once again, when you're speculating, all you have to do is just building a box, building a framework in which you allow the price to move, and then you expect to break out of that box the way you expected it to be. So, to me, and the way you should see this is really fucking black box in here. And as long as we're in there, there's nothing you should fucking care about. So, consider it that way. As long as we don't break it here, no problems, nothing you should really worry about. And if we manage to break this up, then good sign. And this is where you're going to go putting some more money out there. All right? So that's how it is. I'm not fearing anything about what's happening yesterday. Yes, yesterday was kind of a weird day regarding dollar, but I don't see the dollar being bullish and nothing close to this. It can try being bullish, but I think that asset's just freaking fucking bearish, and it's just going one more time to stupid levels it shouldn't be trading. But we're still in the framework, which means I'm accepting those movements. I don't see big dangers out there. All I see is a great opportunity for those who are not bearish in that market yet to eventually take those prices nearby. But as I'm already in, all I have to do is just wait. And this is what I do. So I'm waiting in here to see the dollar finally triggering the signals I'd like to see him doing, which means whenever we'll be there, what we should seek out for is this support trend line in here. To find a higher low in here, okay? I think that's the goal in here. In DXY, find a higher low in here, trying to retrace, and then breaking that low. Okay, it's not going to be straight line in here for the dollar. First we go there, we'll find some support, we'll retrace, and then we break them down. Okay, it's not going to be straight line, really. Think about cycles. So you can expect some 4% down move in the dollar. I obviously want to profit from this one. Clearly will do. The thing is that we should have a pullback afterwards, probably testing that trend line or just go retracing a bit and chasing for that support and act as a resistance. This is something we could definitely do. But the thing is that anyway, I think we're heading to the downside. It's just I'm waiting for the first breakouts to occur. So those breakouts will be near that previous support. And for now, we're having the double bearish, but the market is fighting back. I mean, it's like, once again, everything that could painfully touch the US is a pain trade, which means before getting it right, we'll have to suffer. It's been the case for gold. It's been the case for many, many fucking times. But I still think we're still going to go to the exact same targets. It's just before getting there, the market will try to grind you down, to prove you wrong, to change you, to switch you into your minds. I'm not a fucking switcher, okay? All I accept is to eventually be wrong in timing. So if I'm wrong in timing and if the dollar isn't to be bearish in the current price area, might be higher prices, and it won't make me change anything. I'll remain searching for only bearish trades on the dollar. It's just if here is not the area to do it, it might be higher, near the 97 or eventually 99.6. I'm going to go trading each and every one of those retracements. We're trading 50% retracement, just like we do in the euro dollar. And I think this is a resistant level. We don't have to go higher than that. This trend is really strong. We've been retracing 50% of it, and we even made a dip below that, above that level. So yes, I think we have to build that head and shoulder and get the fucking activated. Okay? So waiting for this to play its game. If we manage to go making higher highs, just as I invalidate euro dollar, I invalidate the dollar scenarios. But it would just be to give some room for the market, but I'll just short it again later. So anyway, dollar bearish is and remain my major scenario right now. Apple still waiting to figure out what the fuck is in play in here, so we're going to see this as a daily perspective. They've been managing to hold the close, but I know, it's not good. It's the worst close they could have made. No, it's not the worst case scenario. It's not making lower closes, okay? So we're still trying to figure out how to handle this. So Apple hasn't yet surrendered a problem. And that's a problem. Obviously, that is a problem. I still expect this to come because, yes, yesterday we've managed to do at least something good, which means we'll be gapping down and maintaining part of that gap. So we're going to see this in a 2-hour chart time frame. Okay, so this is where we closed. This is where we opened. This is as high as we could have been, which means in here is a strong bearish resistance. It's an open gap structure. Generally, we call that breakout gap. I don't know how to call these ones in French. But I would say, yes, it's kind of a breakout gap, and generally suggests the market is going to make a breakout out of this. So yes, for now we're supporting the trend line. Oh, guess what? Same fucking trend line as the NASDAQ is trading. So yes, the market is trying to hold. I expect the market to try trade ranging in here today, so probably not a lot of bulls, but not necessarily big bearish activity today. But somehow I expect that the market, and this is what I'd like to see in the next final hour, from before the candle close, before the weekly close, I would expect this market to break it down and make the lower close on Apple. That would be the worst case scenario. If Apple is doing this today, meaning holding all the starting of that session to just break down at the end. I'm sorry. Okay, sorry, lunchtime's coming, so I'm going to make it quick. So yes, I expect this to come, okay? The problem is, if this is what's happening today, meaning ranging all the early stages of that trading session to close at the low and below that low, if we were about to do this, problem is what it will show us is that probably next Monday is going to gap there and fuck up all the stop losses at once. Okay? It will just basically be this. The thing is that if we do that, we're probably going to have a breakout gap. Okay? Even if we just do this, okay, closing there, all I want is for us to close below that trend line. If we do this, we already gapped that price area, which means very low interest from investors. I can very well expect us to gap just there. Straight from the next support, we just gap 5% down. It's not necessarily 5. Yeah, it's 4% down. Imagine how panicking this will be. If Wall Street's on Monday is opening with a 4% gap on the biggest market cap in all Wall Street's history, how goddamn it is it going to be a great day to me on Monday. If this happens, you can be damn sure on Monday I'm going to be fully reinforcing all my short positions on Apple, because if we go breakout gap triggering on Monday, it's going to be a bloody Monday. It really is going to be one. You can be damn sure about that. If we gap 4%, there's not a single chance that we should find any single buyer on Apple. It's just going to be sellers after sellers. It's going to be a sell-off. So the sell-off we're expecting on the NASDAQ could very well come from Apple. Obviously, highly speculative scenario, very low probability to see that happening. But if I see signs of it moving forward, oh shit, if you have Apple in your portfolios, if you see this, you better have to release some of those shares before the candle close, because if Monday happens to gap down 4%, we're just going to lose everybody who's been buying in here. All the guys who've been buying Apple in here will just be trapped, and we're going to close the trap on them. And we're not going to let them go as fast as they can. It means we're going to have panic selling in here. And I don't see any reason for us to just, below that 4% gap, to just add another 6%. You know how it goes. If the market loses approximately 10 to 12%, and we are low liquid conditions, we're probably going to have market interruptions, which means CME is going to fucking stop, which means we're going to have interruptions. Which means that probably we're going to stop the day in here. And guess what? Next day is probably going to open below the next support and do the exact same thing. So you can expect some pretty nasty price action in Apple until we reach out to the support area we've been highlighting previously. Until we manage to go there, we probably don't find a single support on that value. Yes, it is the biggest market cap ever made. It is also the most stupid trading action I've ever seen in my entire 8 years of trading. So it is absolutely stupid that a market cap that big is related to a fucking phone maker that is selling less than its competitors. It's the third phone seller in the world, so how the fuck can this be the biggest ever market cap we've ever made? Yes, it's because it's the magic thing of Apple to be able to create magic and glitters out of something that is just fucking selling phones. But at some point, glitters doesn't deserve to be the biggest ever market cap. It can be for a short time, but in the long run, Apple doesn't really worth that much. So it means we're going to probably have lower valuation in the futures, and this is what I'm fucking trading. Because what I care is not what's happening right now or what's been happening yesterday. What I care is what's about to happen tomorrow. And I still think the profit to make in Apple out to the downside, even if it means being proven wrong another time, which is possible, they can still very well prove me wrong one more time. And in that case, stop loss triggering, let them do their shit, and next time I'll be there to try again. Bye, guys. Once again, I know I'm saying the same things all over again, but I'd rather like to say them 10 times than having any one of you guys being trapped in that shit after buying Apple.